Keep looking at the head-to-head polls from 2016 on Capitol Hill to changes on Wall Street, what we will see in 2016. U.S. futures bouncing back this morning following Friday's steep losses, currently pointing to a higher opening for the broader averages this morning. Want to bring in former CFTC Commissioner Bart Chilton from Washington, D.C. this morning. Bart, good to see you. Thanks for weighing in here.
Good to be with you. I bring you great tidings of joy from the city of George, where Congress has finally adjourned.
Yes, well, we will take those good tidings and we send them right back to you from New York City. Let me ask you, Bart, about 2016 and about the regulatory environment. What are the catalysts on the horizon in 2016 that are most important to business today, meaning today in 2016?
Well, I mean, so far, you know, we had Dodd-Frank. It was 5.5 years ago. Only 65% of those rules are actually completed. That's 250 of 390 rules. So regulators are going to try to finish those. I think business coming up into this year still needs to play a really active role. I'm sort of worried that they think it's been so long since the Dodd-Frank rule was passed, and the same goes for rules in Europe, by the way, Maria, that they're not going to actively participate. Regulators will listen. I always listen to people, so they need to make sure that their voice is heard. I do think we have some capital and margin rules coming up in the EU. In the U.S., position limits, that is, limits on how much an individual trader can hold, and we're talking about in the commodities space here. And then the big one, and this is in Europe and in the U.S., Maria, it is automated trading and how regulators are going to cope with that. There's been a recent proposal out by my old agency which does some of the many things I spoke about, but also goes further than I ever spoke about, and that's sort of troubling.
Bart, Tim Assad basically was complaining that they didn't get a budget increase at the CFTC. What's your thoughts on that? And is this the case where we're going to see flatter budgets for regulators, which means it's going to be harder for them to implement these regulations?
Well, you got it right. I mean, in one of the final things before they left town last week on Friday, Congress passed a $1.1 trillion omnibus spending bill. They throw it all together, all the spending bills, and sometimes they call it a Christmas tree because they tack different things onto these. And I can tell you about the regulatory provisions that were efforted, at least, to get into that bill. But on the budget specifically, my old agency, the commodities regulator, stayed flat at $250 million. Now, that sounds like a lot of money, and certainly hundreds of millions of dollars is. But the SEC, the equities regulator, is at $1.5 billion. They got a little bit of an increase, a 7% increase, but last year they had a cut, so they're pretty much flat from where they were a year ago. And Chairman Massett, as you said, I think rightly complained. We've got all of these rules that have come online, and the regulators don't have the staff to actually oversee, much less enforce the rules that are online. So that's something that needs to be worked on coming into the next year.
Hey, Bart, when I talk to banks and brokers, they all say that the regulatory environment has made the markets, particularly the bond markets, more volatile. Because of the capital rules and because of the liquidity rules, they don't hold big inventories of bonds anymore that allow them to make markets when they're especially illiquid. When I talk to the regulators, they say that that whole case is overstated, that the Dodd-Frank law has not had that effect. What's your view on this, and what's the best way to address it?
Well, yeah, you clearly outlined the sort of the parameters of the debate, and I sort of come down in the middle on this, which it seems like non-risky, but that's not my modus operandi. Usually, I'm one way or another. I think it's a combination between what's going on in the markets and the added capital requirements that was placed upon the firms, the trading firms, the big banks particularly, by the Federal Reserve and by agencies like my old agency and the SEC. And those capital requirements are important to ensure that there's a backdrop. But the balance, and this is why I'm sort of neutral on it, is that you need to ensure that there's adequate capital, but not excessive capital. So you don't want to, for example, if there's affiliates within a large trading firm, you don't need to ensure that each of them are hedging against each other and have the capital. It's the overall capital that would provide a potential risk to the economy is what we need to guard against. And I think regulators, by and large, are hitting that balance.
All right, we will leave it there. Bart, good to have you on the program as always. Thanks so much.
Happy holidays.
And
Thanks.
to you, Bart Chilton. We'll see you soon. Coming up.